We have what we call premium and discount levels in Forex. And premium and discount levels in Forex, what they basically help us is they help us in identifying. Okay, just a second. Let me fix my sound. Sorry about that. Right? Yeah, I think you can hear me now. Right. So we have what we call discount and premium levels. And these discount and premium levels, what they help us in Forex is they help us to identify where to buy and where to sell in a trend. Right. So I will always refer to market structure, and I know most of you are now bored with this pattern, but this pattern is that one pattern that will always make you profitable in Forex, right? So let's say this was our market structure. Remember, we are traders, and as we are traders, I believe that there's always opportunities in the market. When I say there's always opportunities, I mean to say, remember, at some point, you might open your MT5 and you'll find out that your trade is somewhere around this area or it's somewhere around this area. But then now you already know that you are in an uptrend, right? And for you to be able to align with that uptrend, you don't necessarily have to come all the way down and then buy at what you might consider your support and then continue. I believe there's always opportunities, and these opportunities we get them anyway, right? So let's take it for example, we have a trade. I can refer to my current chart that's on my left right now. Now, someone might be seeing no entry, but personally, I'm already seeing an entry. And how is that so? According to what I'm seeing that, oh, okay, this is supposed to continue going up. Someone might want to come and say, yeah, there's rejections over here, and these rejections are causing price to fall. But as long as price didn't confirm that it's about to sell or it's now selling, we remain in a bullish market. Now, as we remain in that bullish market, remember we need to get entry points, and those entry points are determined by perfect entries or perfect positions. That's where the issue of premium and discount levels come in. What are premium levels and what are discount levels? So let's say we are in an uptrend, and as we are in an uptrend, we discover that we have a low and we have a high. Now, we cannot say we are going to buy straight away from this point. We need to catch our trade in perfect zones or in perfect areas. This is where premium and discount levels come in. So, ladies and gentlemen, these are now what we call premium and discount levels. So what we do is we touch our low and we touch our newly made high. As we touch our low and our newly made high, remember it's going to give us sort of a box. And on this box, we have what we call an equilibrium point or a 50-50% point. So here is our 50% point or our equilibrium point. Right. So let me mark it properly so that we see our equilibrium point. Right. So let me do this, and this is now our equilibrium point. As you can see, this is our half of the box. This is now what separates the high and the low. This is the 50-50% of the high and the low. Now we have what you call a premium level in that box, right? So let me mark that premium, and this is our premium level or our premium zone, right? This being our premium zone, remember we also have now what we call our discounted or our discount zone, right? So these two zones, let me use these two to mark the discount zone so that I use the same two on both. Now, this discount zone is where price is cheap, right? I want you to put this in your mind. This is where price is cheap. And this premium zone, this is where price is expensive. So I'll write price expensive here and I'll write price cheap over here, right? So what it generally means is if we are in an uptrend, right, we are not going to buy in the premium because price is expensive. But what we are going to do is we are going to wait for price to come in the discount where price is cheap and we go with it. We go up with it. So let me put some logic to this theory and turn it into a more practical manner. Now, let's say you run a tuck shop. I'll always give an example of tomatoes, right? You run a tuck shop and you want to go and buy tomatoes at a wholesale. You are not going to buy from an expensive wholesale, right? But what you're going to do is you're going to buy from a cheap wholesale, and then when you go back home, this is where your price is expensive, your premium levels. This is where you're expecting to sell your tomatoes at. So this is how the concept of premium and discounting levels work. This is why you see that most of the times when you see that you have an uptrend and you don't know where to enter, some of us, what they do now is they just mark a low and a high. And as long as they've seen that their high is confirmed, they try to buy anywhere in the hopes that as long as it doesn't come and hit their stop loss, they will tell you they're okay with it. So imagine you have the stress of your trade. Let's say you now enter here, you now have the stress of your trade carrying you all along to the bottom, and you see that it will carry you now back to profits, but all the stress that you went through while holding your trade and not knowing when to enter, but just basing on the fact that price shouldn't break your low, is that stress worth it or not? It's not worth it, right? So as traders who know what they do, we wait. And what do we wait for? We wait for price to get in our discount area and then we buy it from the discounted levels. Now again, there is guys that will tell you, oh, I had a very long trade. It seemed as if my price was failing to break this high. And but then are you putting it in your mind that price can play around this premium level and then fail to break, but then at the end of the day come and buy from the discount end, shoots right straight up? Now we have what you call inducement, and I understand I haven't taught it to my private class yet. Remember, this was supposed to be a private class, but well, I'm not going to teach it, but I'm going to show you how inducement works. So this is what's going to happen. At the end of the day, inducement, or most of it happens in the premium level where you are given double bottoms. But then now you don't know that these double bottoms are going to be your areas of liquidity and your price needs to come and sweep that liquidity, right? As it happens in these premium levels, what are you going to do? What you're going to say is, oh, I have double bottoms, but are you also looking at the fact that you're in your premium levels where price is expensive and yet price is to push down further into your discount where price is cheap before it goes up. At the end of the day, most people, they don't look at that. And they just come and say, I have double bottoms, and then when price comes, what does it do? It comes, hits your stop losses, gets in the discount, and then goes up. This is what I want you to know, guys. When you are trading Forex, don't take it as everyone is trading small amounts. Remember, there's institutions that are involved in these moves. There's banks that are involved in these moves. There's market makers that are involved in these moves. And then there's you. The whole reason why we trade using these concepts is we are trying as much to follow the steps of what institutions do. We are trying as much to follow the steps of what banks do. We are not trying to trade against them. But we are saying, okay, Mr. Institution or Mr. Institution, lead the way and then we follow. This is why we always need to wait for confirmations. Many people have a tendency to think that if they sell a trade, then their small money that they've put in the market is going to move a candlestick. No, it's not. What we need to wait for are confirmations, and we trade following them. And these confirmations, in case maybe someone didn't think of it this way, these confirmations, these are ways of to say, all right, if this is an institution that has entered here and their orders has been fully filled, now they're flowing in that direction, and then you follow them. Right. So now that you know that you are supposed to be buying from the discount if you are in an uptrend. And all right, there's someone who's writing on the whiteboard. Remember, if you write on the whiteboard, we simply put you out of the session. So please don't write on the whiteboard or you'll be put it out. Sorry about that. Thank you. So now at the end of the day, we now know that we're supposed to be buying from the discount and we don't buy from the premium. Right. Sometimes price can go to the extremes of these discount levels. And if we now want to put everything together, these areas, these extremes are extreme points where things like order blocks exist. Or things where we say demand zones exist. Now, let me tell you something. This is when I said demand just now, I then remembered something. Most people, they think that a demand only exists at the bottom. No, sometimes a demand can exist just as much as a quarter way or almost halfway through our low and our high. So always be careful about that. Sometimes you might wait for price to come and reach a demand that does not exist because you think that it exists at the extremes. Right. So let me continue with what I was saying. We have what you call my extreme discount levels, whereby you'll be expecting price to just tap in the discount and then you expect price to tap in the discount and then it buys. But then at the end of the day, you see that it tips into the extremes. But as long as it doesn't come and break your low, you're still valid. And then you see that it goes up. Right. So let me remove this and go on the actual chart. I want to show you something. Right. So another thing, before I show you this, I want to show you this. Now, as we are saying we are in an uptrend, right? As we are saying we are in an uptrend, it's not always, guys, it's not always when your price is to come and buy below the 50% and then continue. So we have what you call my complete retracements, and we have what you call my incomplete retracements. We have what you call 50% retracements. We have what you call incomplete 50% retracements. Okay, let me put it in a diagram. So let's say we've marked our high and our low, and this is our high and our low. The proper or the standard way we always do things is we wait for price to come and then dip in the discount levels. But then there are points where price just doesn't come and dip in the discount, but it plays in the premium and then it continues. This is what we call an incomplete retracement. And then there are points where price, this is the most common, where price comes, dips in the 50%, gets in the discount, and then continues. Now, this is what you call a complete pullback, right? So at the end of the day, it's not always when you have to say, oh, my price is in the premium. Just because it bought from the premium, it's not valid. Generally, it happens almost every day on different kind of pairs. It's not like a trade is entitled to always come and then dip in the 50% and then it goes up. But now the trick is here. When you have an incomplete pullback or an incomplete correction, what price tends to leave at these areas are gaps. And this is where price tends to come back in the future and utilize these areas as gaps. I'll show you on the actual charts. So just because you missed a trade here, it doesn't mean that you've lost an opportunity. You should actually take it as a good sign. Why? Because automatically now you know that you have a gap, and then as time goes and price comes back into that area, it's going to feel it and then either go up or continue going down, but most probably we want to look for reversals, right? Meaning that when it comes, we expect it to go up. So now let's go on the actual chart. This is something that I discovered I had missed. I'm sorry about that. Now, let's say let's look for areas where we have highs and lows. Let's go to H1 and let's try to find a trend, and let's see how price was moving when it was utilizing the areas that I'm telling you about. Right, so for example, let's take this downtrend first that we see here. That came in form of a flag, actually. This was a nice flag. So what we see here is we can mark our high and we can mark our low. But then having a low and a high, what did price do? If you want to click on this and mark it to perfection, we'll see that this is our 50% and price came in that 50%, which means that price now, this is another thing. When we are now selling, we don't sell from the discount, we sell from the premium level, and we don't say price is now in our discount, so we now sell from it. Remember, this is now the opposite of the uptrend. So that means we sell from the premium levels. Why are we selling from the premium levels? Because this is where price is expensive. So imagine as if you had bought a phone for $1 and now you're selling it for $4. this is where prices are expensive. So this is where we sell from, right? So like I said, this was a complete pullback or a complete correction, which means that price came in our 50% range and then it fell. But now, here is the trick that most people don't look at. I want you to look at this. We had healthy price action here, but then all of a sudden we had a gap, and we can mark that gap just in the discount level. And what did price do? Price just chose to get in that premium level. When it got in that premium level, it filled the gap. And when it filled the gap, what did it do? It fell. So it's not always about saying my price is now in the premium level, so automatically I should just sell from here. Also look for clues within the market. Order blocks, gaps, your supply, your demand zones. You see. So pretty much from this would have been a very easy and simple trade. Even if I had to come and take a fib in the future and just say, let me say, I want to place my fib. I can place my fib and generally see that it came and then just tapped on the 0.618. Right. Now, I want you to see this, guys. I didn't want to go to the extremes as much as this, but I know that you now already understand the whole concept of what I'm telling you. I'm also going to upload this session on YouTube so that if there are areas where you don't understand, you can just replay them back again and again. But now I've found something interesting that I feel like I should tap into, right? So, like I always say, whenever you find, okay, I'm hoping price will allow us to get to that point because I think I have something important to share based off from this point. Yo, it's not loading at that point. Sorry, guys. Okay, let me go to M30. Let me go to M30 and see if they are gonna load. All right, I think is it that point? Um, Let me just zoom out a bit. I want to go back to that point and show you something. This is now one of the tricks that I also use if I want to catch very nice entries whenever I'm trading. Yo, it seems as if it's not allowing us to load back to that area. I'm sorry about that. Okay, let me go to H1. But H1 is where we started, is it? H1 is where we started. So I don't think they're gonna allow me to go as low as M30 or M15. They just want me to get stuck in H1. But then now in these areas, this is always something that I say almost every time. When you get to your points of interest, what you need to do is a perfect market structure shift, which means, okay, let me try again for the last time. I feel like this is important for me to show you because I know someone is going to be screaming again saying, I've got it, I've got it, I've got it. Anyways, when you replay back this video, I want you to look at how price was playing. I'm almost definite that price was having highs and lows, 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 highs and lows. And then it just came and tapped on the 0.618. Now, the only entry criteria that we will use when we come to these areas, and I will always repeat, is we want to see our market structure coming to our points of interest and then give us either a break of structure, a change of character, and a continuation. As long as we don't have a break of structure or a change of character at these points of interest, we are not going to sell anything. Rather, I would rather continue buying. Why? Because I'll be knowing that I haven't confirmed a sell. Now, some people I know, you always have this question: what is confirmation? Confirmation, simply a break of structure is your confirmation. And that's the only confirmation that I almost always use. Break of structure. And what does my break of structure tell me? It tells me that direction is about to change. When a small time frame changes, the bigger time frame follows. I think I've always been telling you about that. For day one to move, M1 must shift first. For the monthly chart to move, M1 must shift first. And the sequence is M1 shifts first, followed by M5, followed by M15, followed by M30. You cannot start shifting H4 while you haven't shifted H1. You cannot start shifting H4 while you haven't shifted M1. Right. All right. There's someone who's writing on the whiteboard. Mr. Nice FX, please don't do that. Right. So, as always, as our trades go and as the trends goes either up or down, we always need to follow one simple rule. We buy from the discounted areas. We sell from the premium areas. We buy from the discount if we are in an uptrend. We sell from the premium if we are in a downtrend. Again, let's look at this over here so that we see what I'm also talking about with that area. I'm hoping we can continue with it so that we get the full view of everything that I'm saying, right? So what you see is, even if in this area, when we were in a downtrend, what you see that if you come, you mark, what are you gonna have? You're gonna have your premium and your discount, and where did price sell from? The premium, right? Again, even if we come and we want to shift to the new high and the new low, where did price come and sell from? It came and sold from. I think we can all see with my box where the 50% is. We came and sold from the premium. Right. Now, let's take it. We are now flowing in an uptrend. Right. So let's come here. Let's mark the low and the high. Where did we buy from? We bought from the discount. Again, let's put on the new high and the new low. Right. Now, this is going to be our example. Some people will come and try to take this one over here, which is also okay, but I like to see my market structure very clear. So some people might come and say, take this as an example. I want you to listen to what I said. When price doesn't give you a complete correction or a complete pullback, what does it end up leaving? It ends up leaving you with capes. And what is this? This is a cape. This is a cape. Meaning that even when price comes in the future, we should get some form of a reaction around this area, and then price goes up. And then what did price do here? Came just as where those gaps are. If you want to put it to perfection, it's gonna end up somewhere here, just where those gaps are. And then what did it do? It went up. So when it gives you an incomplete reversal, don't take it as, say, an incomplete correction, I mean, don't take it to say it has failed. Why? Because you know that when price comes back to that area again, it's just going to buy. And we can see we have a low here and we have a high here. Our next low was here, which didn't even cover the 50% of this structure, meaning that it left a gap and then price came to it, filled, and then it went up. Just as simple as that. You can be catching very nice, very, very good trades, very, very good sniper entries. But now I also want you to look at this. If you had entered here and your trade decided to pull you as low as the 50% or as low as the discounted areas, you would have suffered. It would have taken you long for this trade to recover you and then come back into profit. That is why we always say we prefer for price to come in the discount and then you buy it from there. But if it refuses, don't battle it because it will always come back in the future and then react on those areas. So let me do this over here.